Okay. Good evening. We are on the Village of Seaward respectfully acknowledges that we are on the land gathered on is the unceded territory, traditional territory of the Comox First Nations, the traditional people of our land. I'm having a tough time speaking. Traditional keepers of our land, sorry. Call to order. Introduction of late items. CAO? No. Approval of agenda. Everybody's good with the agenda? Minutes of previous. Good. Petitions and delegations. We have Derek Lamb, Gabby Martin, the audit team from Chad Noasat Boats.
Yeah,
Are you sure? Okay.
I hope so.
To present the 2021 audited financial statement and the audited finding report via Teams. It's all yours.
Perfect. Thank you very much for having us, Mayor and Council. My name is Derek Lamb. I'm the partner on the engagement, and we have Gabby Martin with us as well, who is up there managing the audit. I'll take you through the audit findings report right now. And if there's no questions on that, Gabby will take you through the audited financial statements and then leave it for questions. We're here at your for yourselves, so please let us know if there's any questions at any point in time. Share my screen here. And so on my screen right now, I have the audit findings report, which is part of our audit package. Just jumping to page number 3, which is on the screen, the status of the audit. The audit is complete pending your approval of it today. Finally, with the motion approving the audited financial statements, we will issue them and provide copies, of course, to yourselves and Lisa. Obtaining a signed management representation letter, which is still outstanding, and then obtaining your approval of the uncorrected adjusting entries for the financial statements. And I'll get to what that means in a moment. So as part of our audit, we're required to go through, with those charged with governance, the significant audit matters. So for us, it was certainly a busy year in terms of capital in the village, but in terms of any other unique items, which I'll touch on, there wasn't too many. But for the audit, there was some big capital items. The Newcastle Dam decommissioning during the year, $389,000 was spent on that. The water treatment plant fencing had $44,000. You purchased land for $48,000, as well as a lift station generator was purchased for approximately $100,000. So there's some very significant capital items purchased during the year, and just in terms of our work on it. Our staff actually went up and saw the dam. We saw the generators arriving actually when we were there, and we saw the new weir that was installed. So beyond actually going to visit the sites, we went and vouched these items to invoices, verified that they're accurately recorded and completely recorded. So certainly can assure Mayor and Council that the amounts reported on the financial statements with respect to these items are accurate. Jumping to the next slide. The other big significant audit item for us this year, and it's been this way for a number of years for those that have got to hear our audit presentations every year, is the internet deferred revenue that is presented on the financial statements of the village. So consistent with prior years, the village collected funds this year totaling $12,566 from the new contractor, I guess, who purchased the agreements from Sayward Valley Communications. The total amount collected to date with respect to revenues for the equipment rental for the village at December 31st, 2021 is $62,595. These amounts were intended to originally be for repair of equipment or maintenance of the lines. The contract that it was for, though, expired October 15th, 2021 and was not renewed. And so for us as auditors, when it's sitting as deferred revenue, what that means is it's sort of showing not as your own income, so not income money that you can control, but almost as a liability. And in our minds, it's either revenue that's going to come into the village if everybody just says, hey, we don't know how this works, or it's going to be a liability owing back to the original funders, which is how the terms of the contract in our reading of it are stated. And so for that point, either way, it sits as a liability under the balance sheet or statement of financial position. And so we feel that it's accurately presented at year end. And Gabby will show you exactly where it is, but 62,595 as deferred revenue at year end. And we did identify one small control deficiency with this, which is really just the lack of clarity or contract in place at year end with respect to this. From accounting practices and policy side, probably not the most exciting thing I know for anybody that is an accountant, but we can confirm that the accounting policies and practices were consistent with prior years. So what you see in those financial statements, nothing has changed from prior years. There's been no new policies or practices implemented, and we found no reason with which to disagree with any of the judgments or estimates made by management. For our audit, we set a posting threshold of $2,300, which is sort of showing on the screen there. What this number means is that any accounting error, or not even error, but any accounting entry that we think should be made that's under that number, we wouldn't suggest to Lisa to make. Anything above that number, we would suggest to make. And the idea of an audit is sort of you set a threshold and you audit to make sure that the numbers are reasonable. We don't want to be auditing every number. And so that in this case, the threshold was $2,300. If we did find something.
Sorry.
Yeah.
Sorry, Derek. Who picks that threshold?
Yeah, that's a really good question. So Canadian audit standards give us guidance on how that threshold is determined. So CPA Canada sets these standards, and they say you can choose a threshold for materiality of 1 to 3% of gross revenues. And it's a really long answer to get to your to the end answer, but you can choose 1 to 3% of gross revenues. And you would choose 1% of gross revenues for if it was something very high risk. So something with no control, something with lots of judgments and estimates, something that isn't black and white, something that has an underqualified staff, you would choose a lower percentage because you'd want to test more. It's higher risk. Whereas an organization like yourself now with Lisa there, and it's not, you guys aren't building rocket ships there. You get taxpayer money and you spend some on capital, you spend some on operations, and you have some left for reserves or surplus. And so we consider, based on your staff, the nature of your operations, your organization to be fairly low risk. And so we pick the higher of that threshold that we're allowed to choose. And so that's where you get the audit materiality of $46,000. Now, then you're saying, well, Derek, I asked about the $2,300. That $2,300 is 5% of $46,000, and that's guidance that were given to us by CPA Canada as well. So that is a posting threshold at $2,300. So if we found, let's just say you guys bought an insurance policy for $1,000 and Lisa expensed it and it covered a year, right? So anything that has value beyond the year end should be sort of set up as a prepaid expense for accounting. But it's $1,000 and it's not worth Lisa's time or our time to try and figure out, hey, there's 9 months left of this policy, we should capitalize that. So we would say, listen, it's below our threshold, we'll leave it as uncorrected. Whereas let's say you bought a truck and you want to expense the truck. We'd say, well, it's $20,000 a truck. I'm sorry, guys, you can't do that. Accounting policies say that you have to capitalize it and show it as an asset on your books. And so that's where that $2,300 comes in. That truck would be over that number. But let's say it was a $20,000 truck and you guys really, really wanted to expense it because I don't know, if you had a difficult funder and that funder wanted to see it as an expense. We could agree to disagree on $46,000, anything under $46,000. So we would say, hey, this is wrong for accounting, but we don't consider it to be material to the financial statements as a whole. So we're going to tell or inform, tell sounds like I'm tattletaling, but we're going to inform those charged with governance, mayor and council, that there are these unadjusted entries. They should be corrected, but it's your discretion to not correct them. And so that's what that $46,000 number is. It's sort of a number where we can agree to disagree on anything for accounting, as long as it's not fraud and theft. Fraud and theft, there's a $0 threshold for that. So that's in a very long answer, Mayor. I apologize.
No, that's good. Thank you.
That's where that comes from. So the next page discusses control deficiencies. So as part of our audit, and sort of how we assess the risk of your organization, one of the things we look at is controls and how they're operating. If someone's reviewing payroll biweekly or monthly, if someone's reviewing bank reconciliations, if as mayor and council, you're getting financial statements to review, that means that there's controls in place, because likely you may point at something and say, hey, what's this? And that would raise a question or might spot an error. Or likely with review of payroll, you might spot an error in payroll. And so we look at every one of your controls and say, hey, Lisa tells us this is how it works. We believe her, but we're auditors and we like to check things. So we'll do a walkthrough of one. So every control that you've described to us or that Lisa has described to us as existing, we've walked through and said, okay, we're going to pick a random payroll in May, show us that it's approved. And show us the digital signature or show us an initial or show us whatever indication of approval may exist. And so for our audit, and I think it's a credit overall to your team there in the village, because in past years it hasn't been this way. We only had one other than significant control deficiency. So we didn't. In past years we've had a number of them. I mean, you had some years where there was transitions between your accounting staff, and there was a complete breakdown of controls. There's no similar items this year. It's only one small item this year, and it relates to the lack of agreement existing or clarity existing around the internet revenues. So it's certainly a credit to Lisa. It was a very clean audit for us this year. So we appreciate the assistant with that. And this statement, as well as our management letter, is sort of the proof of that. So with that, I'm not going to go through anything else. We do have appendices there, which include that one noted control deficiency. If there's no questions for me, I'm going to throw it to Gabby once I figure out how to stop sharing my screen. And and she'll share the financial statements and yeah.
All right, let's see if I can take over here.
Yeah. Oh, there you go.
Does that work?
Yep.
Perfect. Great. So yeah, I'll be taking us through the financial statements here. Feel free to jump in as I go through if you have any questions. So just starting out, the very first item that we have for you is the management report. So the management report here is signed by Lisa. We'll get that signed by Lisa. And it just outlines the responsibilities that management have for the financial statements and outlines the fact that ultimately management is responsible for the financial statements.
5.
The next report that we have is the auditor's report. So this is our report that we issue. And the most important part of it is, of course, the audit opinion. So that's in the very first paragraph here where we state that we have an unqualified audit opinion, which essentially just means that it's a clean audit opinion and there were no big issues that you should be aware of. It also outlines the responsibilities of those charged with governance, so yourselves. There's our responsibilities as auditors and the responsibilities of management as well. So the next item here is the statement of financial position, or often referred to as the balance sheet. So I'll just take you through some of the higher level items here and some of the bigger changes that you'll notice. So first up, you'll notice that cash decreased this year by about 500,000. The main reason for that was you did have a surplus this year of about 156,000. So that would increase your cash balance. But there is about $670,000 worth of capital assets that were purchased this year, which Derek took us through in detail already. So that was the main reason for the decrease in cash that you noticed there. There is no significant changes in your portfolio investments this year. Those are the investments that are held with MFA BC. And then for accounts receivable, you'll also notice that there's a significant increase there at 411,000 this year. That's an increase of about 250,000 compared to last year. The main reason for that increase is because there's a significant receivable for the Newcastle Dam. There's an older agreement from a couple of years ago that is still ongoing with the province and the government of Canada. And they essentially are required to pay a certain portion of the costs relating to the dam. And at the end of the year, there's 166,000 receivable from the government of Canada for amounts that were spent this year on the dam. And that's the final amount that will be paid for the dam. So the remaining costs for the dam will come from the village's own funds. In addition to that, 166,000 receivable for the Newcastle Dam. There's also about 125,000 receivable from UBCM for various projects that the village completed this year. Significantly, there was the OCP as well as the flood mapping, which were both funded by UBCM and receivable at the end of the year there. The next item you'll note under liabilities, and the first one here is accounts payable of 208,000 at the end of the year. You'll also note that there was an increase this year compared to last year of about 80,000. And the reason for that increase this year was also related to the Newcastle Dam. There was a holdback for the contractor of 76,000 at the end of the year. So that made up almost entirely the increase that you note here. Next, you'll see deferred revenue, which decreased quite a bit this year of about 100,000 compared to last year. This year, we're at nearly 100,000 compared to 200,000 in 2020. The reason for that was because there were quite a bit of funds that were received in past years that were spent this year. So I'll just jump into the note 5, which kind of shows the breakdown of deferred revenue there. So here you can see the total from 2020 making up that 200,000. You can see here there was 25,000 for the Newcastle Dam. This was also in relation to the agreement that I mentioned previously with the province and the Government of Canada for the funding of the dam. The province provided the village with an upfront payment for the dam, and that's slowly been drawn down as amounts are spent each year. So the final amount of 25,000 remaining of those initial proceeds were recognized this year. And then the next item here is the item that Derek had mentioned, the internet maintenance. So those are fees that have been collected over time on that agreement with Sayward Valley Communications that are meant to be spent on upgrades to the internet system in the future. So this year, as Derek mentioned, there was about 12,000 received from the new contractor for that program. And at the end of the year, there's 62,000 in deferred revenue relating to that. So this is the amount that at this point in time, we're not too sure what is happening with it or whether that will be repayable to the original funders of that program. So just so that you're aware of where to find that in the financial statements, it's right here. And there was a couple other additional items. The emergency program, 75,000 received in a past year that was spent this year on the flood mapping. And then the BC rural dividends of 10,000 that was also spent on your website upgrade this year. So those are the big items that you'll notice where funds from past years were spent this year and resulting in that decrease of about 100,000. So just jumping back to the statement of financial position. The next big item here, long-term debt decreased this year just because of payments that were made on long-term debt. And I'll take you to that note as well. It's easy to go through as we're looking at it. There was no new debt added this year. So at this point in time, you have debt for the sewer and the water upgrades from about 2005. So those are just paid down annually. Last year, you also added debt for the public works truck that was purchased last year. And this year you made 23,000 in overall payments on that existing debt. So that's the reason for the decrease this year. We also provide just a bit of a breakdown on how amounts will be spent annually up to 2025 and the amounts that will be spent in total. So next up on the statement of financial position, prepaids is not significantly different from last year and not a very significant item for us. Tangible capital assets, Derek has also taken us through in detail. At the end of the year, it did increase this year, mainly because of the additions that we've mentioned of 670,000. So here in note 7, you can kind of see the breakdown of what's in that large number. So at the end of the year, you had about 10.8 million in capital assets. You can see here the additions. So the various additions that Derek mentioned, including the land, we've got the Newcastle Dam here in water, There was also the flood mapping included in sewer and drainage. And then we also had, you'll notice, a disposal here. So there was under vehicles, there was a disposal of vehicles, which was traded in when the new truck was purchased, the public work truck. So that's just taken out of your capital assets this year for 14,000. And then you'll notice here underwater, there was also a disposal of the old Newcastle Dam. So this year, the dam was completely demolished and it no longer serves any purpose since it's no longer holding back water or really doing anything for the village. So I believe that was originally constructed, I want to say in the 40s. And that amount has now been removed from your assets. So it had a total value of 328,000. We had accrued accumulated amortization on that of 246,000. And the net result of writing that off is a loss of about 80,000. So you'll see that within the income statement or the statement of operations, and I'll point that out to you as well. So after the total additions of 670,000 and the amortization of 203,000 this year, we had the net increase that you'll see here in your total assets. We also highlight in this note just some of the items that are still in progress at the end of the year. So for capital assets that are still in progress, we don't take any amortization because typically they're not in use yet. And then once those items are put into use, they start to be amortized. So we note that there's the Newcastle Dam, which is still in progress at the end of the year with a few items remaining. There's also the drainage plan, which started this year for about 16,000, which is not being amortized as it's still in progress. And then finally, the lift station generators hadn't been installed at the end of the year, so those are also not being amortized. So that takes us to the end of the statement of financial position. Next up is the statement of operations here, where you can see your revenues and expenditures for the year. So first of all, you'll note that the annual surplus at the end of this year was 156,000.
Page 9.
So first, under revenues, there was quite a bit of an increase in revenues this year with 1.7 million in total revenues. The total increase was about 229,000 for a couple of reasons. The big one being government grants and transfers, which you'll notice here. Government grants increased by about nearly 200,000 this year. And the main reason for that was the recognition of revenue for the Newcastle Dam, which I've touched on, both from the province and from the federal government. So that was 195,000 in revenue, and kind of the main reason for your increase in revenues there, as well as a couple small other items, including just your regular tax increases and user fee increases. Under expenditures, there was also an increase this year. You had an increase of about 476,000 in expenditures. That was also for a couple of reasons. You had quite a bit busier of a year this year with quite a few projects on the go. You had your flood mapping, which was about 150,000. Your OCP was also done, your website upgrade. And then in combination with fewer COVID restrictions, you had more activities going on, as well as more staffing this year. So that was kind of the high level increase in expenditures. And as I mentioned, that took us to an annual surplus of 156,000. So I will take us to Schedule 2 and 3, where you can see the breakdown of each of your departments and the revenues and expenditures related to each of those and the individual surplus and deficits for each of those as well. Just provides a little bit more clarity on those. Oh, I'll take you to the statement of cash flows and just show you high level how your cash changed this year. I did mention that cash went down about 500,000 this year, and that just relates to essentially your operations. So overall, you had 161,000 increase relating to your operations involving your annual surplus, and then the various other adjustments for that, and then less the purchase of assets of 670,000 and the repayments of long-term debt of 20,000 for that total decrease that we note here. Next, we have the notes to the financial statements. So the first item in the notes are your accounting policies. And in the audit findings report, Derek mentioned that there was no big changes to your accounting policies this year, and that we do agree with them. So I won't dive deeply into any of these since they are all the same as last year, and we have assessed them all as being appropriate. Taking you through some of these. The first couple notes here just break down a little bit more in detail your portfolio investments, accounts receivable, and accounts payable. I've touched on deferred revenue here, so I won't come back to this one, as well as long-term debt and assets. Taxation breaks down amounts that were received for your general municipal purposes. So you received $362,000 in regular property tax income this year. And then this note also shows amounts that were collected for other governments, as well as amounts that were remitted to other governments. So you can see the net amount at the end here is equal to your property tax revenue, and that's just because amounts collected for other governments are essentially collected and then repaid. There's no change to your contingencies this year. The pension plan note here just breaks down amounts that were paid in employer and employee contributions for the pension plan. And then underneath your accumulated surplus note, this is where you can see the total of your accumulated surplus and how it's broken out over the years, where Mayor and Council have allocated specific funds for future use. So the total is nearly 2 million here. We have general sewer and water surpluses in the beginning here, and then reserves of 511,000, and those are broken out in Schedule 4, so I'll take you through those as well. And then just equity and tangible capital assets is the value that you have in your assets of 10.7 million. So this is the total value of your assets less the amount that you owe in debt. The fiscal plan just outlines how the financial plan or budget is broken out, and the annual surplus was 89,000 in your budget this year. No changes to your segmented information. And then the final note here just notes that COVID-19 is ongoing and could have an impact on the village in future years. It's unknown what the extent of that impact will be, just given the fact that it's ongoing. Here in Schedule 1, we have government grants and transfers. So these are amounts that were received from the federal and provincial governments in various grants. So underneath the federal grant, the significant one that the village receives is the gas tax funding. So this year, you'll notice it's a bit higher than last year at 139,000 compared to 69,000 last year. The reason for that was because there was a top-up received this year in gas tax funds, and that occurred for all municipalities and resulted in that increase there. Under the province, you'll note that you have your annual Small Communities Grant. This one is received each year, and you received 377,000 for it. And then various amounts of other grants, which are received for various purposes. Under infrastructure, the 195,000 relates to the Newcastle Dam, for the total of 1 million at the end of the year in various government grants. So here under Schedule 2 is where you can see your revenues and expenses by individual segment or department. Just provides a little bit more information on how those funds were spent by program and a little bit more clarity here. The big one you'll note is general government here. So there was an increase in wages and benefits this year since there was more consistency in staffing and less issues with COVID-related absences and that kind of thing, closures. And you can see your total annual surplus of 156,000 here at the end of the year. Schedule 3 is the exact same schedule, but for 2020. And then finally, we have Schedule 4, which is the statement of reserve funds. So you can see how the reserve balances are at the end of the year and how they changed throughout the year. So some of the bigger ones, you'll note that these two reserves, the Recreation Center Equipment and Recreation Community Fundraising, they had small balances in past years. And this past year, Mayor and Council voted or decided to get rid of these two funds. So those amounts have been transferred into a new fund called the capital fund, just for simplicity purposes. Under land sale, there was the land that was acquired this year, so that was transferred out of the land sale fund for $42,000. And then under the federal works fund, the gas tax funding is transferred into this reserve, so for $139,000. And then the amounts that were spent from the federal works fund related to the acquisition of capital assets. So there was the flood mapping, as well as the Newcastle Dam allocation that was not covered by government grants, for a total of $156,000. And finally, we have Schedule 5. This is the statement that's required, or the schedule that's required for the COVID-19 Safe Restart Grant that the village received last year from the province. So in 2020, there was $268,000 received from the province, and the village is just required to show how those funds are spent until they're drawn down to zero. So these are amounts that council has approved for spending of those funds. This schedule is unaudited, so there was no work performed over these amounts, but you can see exactly how those amounts were allocated from that funding this year. And this is just provided to the province for their information. So that takes us to the end of the financial statements. Did anyone have any questions?
Can I ask about just on the note D, intangible capital assets, where I'm sure this is quite common, where the water and the sewer are amortized over 100 years, right? We're about 50 years on ours, and it looks like they need to be, a lot of work done. Is that a common number, the 100 years for those?
Oh, the accounting policy, I believe.
Yeah, tangible capital assets on page 12.
Oh, yes. Sorry, I was there.
So,
Oh, page
talk a bit
8,
about-
page 8. Sorry.
Oh,
There's two numbers on the bottom.
yeah.
yeah, so I can comment a bit on that. Sorry. Is that a common amount? Yeah, it's on the higher end, but it's an estimate and a judgment. It could be, as you know, it could be 120 years. It could be 50 years. It's certainly not uncommon. We would object to it if you put 500 years down there. But overall, I'd say you're probably on the higher end of a number of municipalities that we work with, but I don't think it's unreasonable. And this is two important things. One, an estimate, and secondly, it's just recognizing the cost over their life. So the money's already spent. It's just sort of recognizing that cash that was spent previously over their life. So to answer your question, is it common? You're probably on the higher end. Are you on the higher end by 50 years? No. There's communities with 75, 80, 90 years as well.
If we change that to lower, what would it do? Would it do
Nothing.
Nothing.
No.
Okay.
It would. So I'm sorry, I don't mean to be so flippant, but it would change the amortization of the village. So Gabby, if you can go to well, you have it on the screen, the schedule 2, I think it is. It would impact the surplus and create a deficit, or not a deficit, but it would create more expense. So Gabby, if you could just highlight the amortization expense, 203,496 there on Gabby's screen, if you can see on the shared screen there, that number would go up. I think it would go up by an immaterial amount simply because the remaining value in those assets is likely changing it to, let's say, from 100 to 80 years is not going to have a significant impact on those assets.
Right. Okay.
In their life. So to answer your question directly, if you were to lower that, the amortization expense would go up. You would recognize the value of those assets faster as an expense. We would want to know why you're changing it, because it's sort of the village has had this policy for X number of years. And so we'd want some reasoning and it, as to why. So, hey, we got an engineer's report, and turns out we made a bad estimate, and really, we bought some shoddy sewer pipes, and they're gonna be done in 10 years from now, or something to that effect. You couldn't just decide, hey, listen, we don't like this number, we're gonna change it. It has to be supported by something.
Yeah, yeah, exactly. Yeah, it appears that it was a little bit optimistic, shall we say. Okay, thank you.
Does anybody else from council have any questions? No? Well, thank you.
Yes, thank you.
Thank you both for coming to us via net today. We appreciate all your work.
Yeah,
And
thank you very
council,
much.
just any questions? Thanks for being here. Take care, Derek. Take care, Gabby.
You too.
Yes, thank you for having us. Have a great day.
Thanks very much.
Great evening. Bye.
Good night.
Good night.
And I also want to take the opportunity to thank Lisa for all the hard work that she has
Yes.
put into this.
That's great.
And did you have any other help, or is it just you? Wow, it's a team effort. So I want to thank Melissa as well for your input into this. And chair, sorry,
You guys got a gold star.
and to Jason, excellent work.
Yes, thank you. Jason.
That level of accuracy, Lisa, it's
Yes,
well done.
yes.
And the one thing that was cited is faster control. Control.
Yeah,
Yeah,
yeah.
that's the.
Yes,
Yeah, right.
yeah, this Hayward Valley Communications Internet equipment. Okay, so recommended resolution that the Village of Hayward 2021 audited financial statement be approved. Do I have a motion, please? Second? Discussion? Opposed? All in favor? Motion is carried. Correspondence? None. Council reports? None. Mayor's report on committee, or pardon me, reports committee? None. Mayor's report? None. Unfinished business? None. Staff report? None. Straight to the bylaw. Recommended resolution that the tax bylaw number 484, 2022 be given first, second, and third reading. Do I have a motion, please? Do I have a second? Okay. Do I have discussion? Opposed? Oh, discussion? Nope. Okay, opposed? All in favor? The motion is carried. Fees and charges bylaw number 485, 2022, recommended resolution that the fees and charges amendment bylaw 485, 2022 be given first, second, and third reading. Do I have a motion, please?
I'll move it.
Second. Discussion. Councillor Paulson.
Discussion on. This is on page
53.
53. So it's the amendment for bylaw number 485. Sorry. I do have several questions, and I've looked through all of the general administration changes, all the different categories of the changes, increases in the fees and charges. And I just want, I have a question first on page 55 about for the Kelsey Center under Schedule C, where it is now changed that the equipment rented cannot be removed from the Kelsey Center or off-site. So my concern about that is that every year on Canada Day, Sayward Future Society puts on the Canada Day for free for the whole community, the village and the valley, and people from outside that flock to our attendance. And every year we receive a huge in-kind grant from the village that involves use of the tents, tables, chairs, barbecue, and various other things. So that first, that concerns me. Also, the Tour de Rock, which is going again this year, has historically rented tables, or not rented, but used tables from the Kelsey Center and put on the potluck dinner at the school. And the whole community attends. There's over 100 people. And also the Tour de Rock riders and the support staff set up, or the village, or the people in the village on the committee set up cots in the gym that they use to sleep overnight, and they have use of the showers in the next morning. And then the committee prepares breakfast for them at 5:30 in the morning over at the school again. So those are two big concerns when I read that the equipment cannot be removed off the site.
So I think on that, just let this, we'll just let the CEO comment for a sec, so
Okay.
we don't get too
Yep,
far ahead.
okay.
Thank you.
Go ahead.
Thank you, Councillor Paulson. Oh, thank you, Councillor Paulson. To respond, the nature of that scripting is for rentals from a public standpoint. So I think, we can add scripting in there unless approved by council or granted via permit. That scripting can be added to that bottom. What the nature of this change is that equipment was leaving the facility and by rental from the general public, and that's not something that's traditionally done. And in fact, some equipment, did come back in a causing or facilitating repairs. So, and I also wanted to comment on Tour de Rock, just so we're clear where that's at right now. Our recreation manager has been in contact with the PAC. The PAC has stated that they're not in a position to back that event this year, but we'll get back to the recreation manager. The other concern that was raised by the team was that traditionally cots are used, which are fantastic. Cots should be used for that event. But there was also a large dependency on people bringing in miscellaneous air mattresses and things like that, and provided bedding that way. That is something that's probably a thing of the past in light of the COVID pandemic. So that would have to be figured out by the organizers. The trick of this particular event, though, is there's no organizers. And so we continue to sort of find out what that's going to look like going forward. So rec manager is still waiting to hear back from the PAC, but that's sort of where it's at currently for that event.
Okay, well, the Tour de Rock is an important thing for the community, so we'll have to keep on top of that. But I think if we can change a little bit of the wording on Schedule C here to not reflect those events. So for Councillor Paulson.
Unless approved by council. Then.
Yes, so if I may, all items to remain on property for an event. The Kelsey Center does not do off-site rentals. And then I can add unless approved by council or granted via permit.
Does that work?
That may work, but I would just from this discussion, I would like to propose that I have several other not concerns, but questions about all of the changes and increases, and I don't think council has had enough time to discuss all of these changes, and I would prefer that we were able to move this to another meeting where we can have discussion first rather than having first, second, and third readings today, because I appreciate the information that you've given me about that, because when I read that, I thought, oh God, there goes Sayward Futures Canada Day. But there's lots of other questions too. So, and I think, I think if the other councillors have questions or want to discuss things, that we should have a discussion about it before we go to third reading tonight.
Anybody else on council have an opinion?
I looked at them all, they're all up, which they need to be. So, oh, sorry. Oh, thank you, through the mayor. I reviewed them. I think we all did, but the basic message here is they're all up, and I think they all have to be up to the figures indicated. If we're talking just about the dollars indicated, we're living in a world of increased costs, and anything we don't recover in a reasonable fashion is not good for us. So that's my thoughts.
So, sorry. So my point is that you've read through them. I've read through them, and I do have some very big concerns from my own point of view for us pricing ourselves right out of the market. And when I look at like renting the gym for
$200 a half day and $400 a day.
And no hourly rate, so that people that are wanting to set up teams or whatever, they have to pay the $200. Like, I think we need to go through and have a thorough discussion about the rates. I know when we did the fees and services bylaw last year, and we were talking about the dog rates and the tax, the campground rates and everything. We spent a couple of weeks discussing it, and we talked about whether we were going to raise it or keep it the same or lower it. It's just, I don't think just getting presented it for tonight and not having had thorough discussion about it, that it is it needs to have open council discussion, I think, rather than saying I've read through it and I agree. I've read through it and there's lots of that I question. So I would prefer to have it.
Thank you.
Oh, CEO.
Go ahead.
Thank you very much. I just wanted to, just for council's information, these prices, and you'll see that in one case they actually fell. These are the direct result of staff with the rec center, mainly the rec center manager, doing call arounds to other facilities. And what we quickly found out is an hourly rate just doesn't exist at other facilities. And the reason for that is you just can't rent again. Like you can't go back to back with rentals when you go to set up and cleaning in between. And so it really is half day and full day. Now, if council wants to do something a little bit different here and maintain, then certainly, but I just wanted to bring to the attention that this is a result of some comparative sets on a smaller scale as we wait, of course, for other reports on a larger scale.
Okay. Councillor Kushner, what do you think?
I think it's an awful lot of work, clean up and otherwise, for an hour. Should be at least half a day, I would think, or a day.
Okay, so what do you think of the whole schedule and all the changes?
I'm okay with that.
Do you agree with Councillor Polson that we should have another meeting? Sorry, as I step on her foot.
You're really concerned about that?
I think we live in Sayward.
Do we?
Sorry.
I'm just your mic.
And my concern is that how often is the hall rented out now, and how much less is it going to be rented out with these increases? So yes, I am concerned about the increases, and like I said, we are Sayward. We're not Campbell River. We don't have we don't have people beating the doors down to have anniversary parties or weddings or whatever there. And I just think for the facility that we have, I would like to have more discussion around these rates rather than just stamp a bylaw and say, yeah, I'm okay with this, because some of the, and I did see that the kids program did drop, but that's about the only one that I saw that dropped.
Can I just raise the phone? So we seem to be, we seem to be discussing it right now. This meeting's been pretty short so far. Should we just finish the discussion now? Like, I can't see postponing it. If the comparables, Campbell River was mentioned, I believe they also reviewed smaller communities like ours as well. Am I incorrect? So it's not like I don't know. I'm happy to discuss later if people want, but I don't see the big, like, I think we just do it now in 15 minutes.
Campbell River was not part of that comparison, I would assume.
Thank you, Mayor. We focused on like municipalities. So
Right.
Tassis, Gold River, we call Port Hardy, although they are a larger center. Campbell River was used as a guide, but certainly not as the control, because they are larger and have more exposure to business. The other thing to note here is we did recognize the need to take a look at camp fees, but due to the cost of signage, that we did not recommend change on, because the cost of signage would be quite exorbitant. To change the signage that's actually in the park area comes at a cost, because there is permanent signage affixed that would need to be changed. Also, you will note that the fees and charges generally has your fees and charges for building permits and that sort of thing. That scope hasn't been done, so that
That's
would
a
be
different.
that is coming, and you'll see some considerable changes in that one.
So then my next question is, what is the big rush to push this through for second and third readings tonight?
There's no rush. We can do
No.
it next meeting. Yeah, sure.
I would,
Yeah, we can
I
talk
would,
about it all you
I
want.
would prefer, it's just my opinion that I would prefer to have full council discussion on it.
Sure.
There's a deadline.
Yeah, that was the other thing.
Go ahead, CFO.
Thank you. So through the mayor to council. So my suggestion would be there's 3 schedules that have a bit of a deadline. So your water rates, sewer rates, and solid waste rates. Those need to be adopted before tax notices go out, and we usually print tax notices about the 3rd week of May. So my recommendation tonight would be to perhaps direct staff to bring back the amendment bylaw for the May 3rd meeting with just those schedules being amended. And then further discussion can be held either that meeting or a future meeting on the other schedules. But those 3 schedules themselves need to be adopted by a certain date. So that would be my recommendation, is we just bring back an amendment bylaw for those 3 schedules on May 3rd. Thank you.
Couldn't we just deal with it tonight? Like 15 minutes, we should be done, right? Like, I can't see spending 2 hours talking about this. This is my
Yeah.
opinion. It's like, I have no problem doing it later, but we're running up to deadlines, and it's like, why not just talk about it now?
I don't think we're running up to deadlines for all of the schedules that are included. We are running up to a deadline for Schedule D, E, and F.
Yeah, sure.
And I would suggest that we could even make a motion to amend this bylaw to only include those 3 schedules in this bylaw. And then at a later date, when we've reviewed all of the other fee changes to the fees and schedules bylaw, that we do that at that time at the next meeting.
I think we have to follow what the CFO just said, whatever that was. That's basically the way we have to
Okay.
go. So I'm fine with that.
Okay,
It's
well,
really
we'll bring it back to May 2nd on an amendment bylaw.
Yeah, yeah.
May 3rd.
May 3rd.
I'll be here on the 2nd. in case anybody else wants to
Make sure you lock the.
join in. CAO?
Sorry, just for clarity, and I know, so in terms of having a bylaw that just includes 3 schedules, that wouldn't be possible without a complete repeal. And you're just,
Just
yeah,
doing
this
an
isn't just an amendment. So yeah, okay.
Okay, so we'll do that for May 3rd. So this current motion in terms of passing first, second, and third reading, we're going to, pardon me? No, we're just going to move it until the 3rd. Move to the 3rd. Fees and charges. Oh, that wasn't that one, was it?
Yeah.
It was.
That's it.
That was it?
We're at new business.
Okay. New business, none. Public question period. Do we have anyone? Anyone online? Nope. Okay. Do I still have to read it? Nobody's here. What does it matter? Okay, in camera, none. Adjournment.